Ladies and gentlemen, good evening. I extend a warm welcome on behalf of Star Housing Finance Limited to earnings call for 9 months ending December 31st, 2023. On this call, we shall delve into the operational and financial performance of Star Housing Finance Limited, focusing on key achievements and actionable insights for the year. After the management commentary, we shall be open to take the questions from the participants. Introducing Star Housing Finance Limited, we are a retail housing finance company focused to provide housing finance assistance to first-time home buyers in our operational semi-urban and rural geographies. Our target customer segment are economically weaker section / low-income group families constituting the bottom of the pyramid who wish to purchase their own home. We provide long-term retail housing finance assistance to these deserving families at fair terms. We are listed on the main board of the Bombay Stock Exchange and are headquartered in Mumbai. Our network comprises of 30 plus physical and manned presence across geographies of Maharashtra, Madhya Pradesh, Gujarat, Rajasthan, NCR and Tamil Nadu. We are a team of 200 plus housing finance professionals across functions and geographies with requisite domain in low ticket housing finance space. Star Housing Finance Limited has begun a growth phase since financial year 2021-2022 and has cumulatively provided housing finance to more than 4,500 plus families till date. Coming to the performance for the period of 9 months ending December 31st, 2023, I wish to state the following points. Number 1. During the period, the company provided housing finance assistance to 1,500 plus families from EWS/LIG segment. Courtesy strong incremental disbursements, the AUM stands at rupees 368.67 crores, registering 97% year-on-year growth. Number 2. The asset book so created is retail and diversified across operational geographies. Average incremental ticket size is at rupees 12 to 13 lakhs in semi-urban and 6 to 8 lakhs in rural locations. Number 3. The book is getting seasoned, so we grow, keeping intact the asset quality, culture of credit and collection observed by the team in day-to-day operations has resulting in PAR, that is portfolio at risk, which is anything that is 0 plus day past due, stands at 3.84%. Number 4. Gross NPA stands at 1.64% and net NPA stands at 1.24% as of December 31st, 2023. Provision coverage ratio stands at 39%. Number 5. We continue to invest in manpower, branch infrastructure and technology with an objective to provide a solid foundation to build business. Plus version of existing lending suite is in the process of deployment. With added functionalities, the suite enables to improve productivity, credit and receivable management process in the organization. Number 6. We have expanded in North with a presence in Ghaziabad in NCR and shall work in further build-up presence in the region over the next few quarters. Network expansion is being planned in existing and selected new geographies post getting all approvals in place. Number 7. We continue to focus on AUM scale-up through on-book and co-lending partnerships with our partners. Number 8. Under the leadership of CFO Mr. Natesh Narayan, during the period, Star HFL has cumulatively got sanctions of approximately rupees 203 crores of credit line from 11 banks and financial institutions. The pipeline is robust to cater to the planned growth. Number 9. The diversification of the borrowing profile has been initiated and Natesh shall share the same in his address on this call. Number 10. I wish to reiterate that Star HFL is listed on the Bombay Stock Exchange and has more than 6,000 shareholders. As the company gets ready to get transitioned to the National Stock Exchange, subject to all approvals and clearances, Star HFL, with its current net worth of rupees 130 crores plus, has met the quantum criteria of rupees 75 crores net worth and now awaits qualification of the tenor criteria. Number 11. Star HFL has healthy capitalization level and same has been strengthened by the capital raise done in Q3 ending December 2023. Natesh shall cover this in his address. Number 12. We are happy to share that Mr. C. Lango, a seasoned professional in mortgage space and ex-managing director of Campaign Homes, has been inducted on the Star HFL as an independent director. This further strengthens our existing board comprising of Mr. A.P. Saxena, ex-general manager of National Housing Bank, Mr. Ajit Kumar Lakshmanan, ex-executive director of LIC of India, Mr. P.K. Das, ex-executive director of IDBI Bank, Mrs. Neelam Tatir, a chartered accountant and company secretary professional, and Mr. Kabir Jain, paving way to become a board-driven, well-governed housing finance company. Continuing with the philosophy of employee ownership, Star HFL board has approved the employee stock option scheme 2 for eligible employees. This is the second scheme implemented by company considering the expanded employee base and the contribution made by the eligible employees to the growth of the company. We are happy to have registered robust growth during the period, keeping the quality intact. The capital raise during warrants has strengthened the capitalization levels. Liability pipeline remains robust, which helps us to plan for growth. We continue to invest in technology, manpower, and branch infrastructure, providing a strong foundation for balance sheet scale-up. We have strengthened our presence in existing geographies and forayed into North through a presence in NCR region. Through this growth, our focus remains on enabling retail credit access to first-time new-to-credit home buyers towards purchase of own homes. We look forward to round off the current financial year with this momentum. With this, I now call upon Mr. Natesh Narayan, CFO of Star Housing Finance, to speak on the balance sheet, profit and loss, and financial ratios for the period ending December 31st, 2023. Thank you, and over to you, Natesh.
Thank you, Anu. Good evening and a warm welcome to all the participants. I'm pleased to share that the growth momentum that prioritizes quality has continued, resulting in robust financial performance. On this call, I wish to acknowledge the efforts of the team in building a strong foundation for our liability framework that have now successfully having a working relationship with 17 banks and financial institutions. During this 9-month period, Star HFL has received its first single 50 crore ticket term loan. I also wish to share another milestone on the equity front. In Q3, Star HFL issued warrants for 60 crores, of which 25% amounting 15 crores has been received. This has further strengthened our capitalization levels. We have received sanctions totaling 203 crores from 11 banks and financial institutions in this 9-month period. The undrawn limits and the debt pipeline will help us scale up our AUM in accordance with our growth plan. With this, I share the financial performance for the period of 9 months ending 31st December 2023. The following are the highlights. The asset under management stands at 368.67 crores as of December 2023, vis-a-vis 187.58 crores in December 2022, a year-on-year growth of 96.54%. Disbursement for the nine-month period stands at 166.89 crores as against 112.96 crores, a year-on-year growth of 34%, close to 34%. The total income for the 9-month period stands at 42.29 crores as against 24.75 in FY23, a 9-month period FY23. Again, a year-on-year growth of 70.87. The net interest income in the 9-month period stands at 19.09 crores as against 14.39 in 9-month FY23. GNPA as of December 31, 2023 is at 1.64% and NNPA at 1.24%. For the period ending December 31, 2023, PAT has increased by 40.82% year-on-year. During the period, the company received a total sanction amounting to 203.42 crores, of which 148.42 was disbursed. There are still undrawn limits of 55 crores. Total borrowing outstanding as on 31st December 2023 stands at 266.49 crores, thus giving us a leverage of 2.05 times. During the period, Star HFL has successfully placed its first NCD of 200 million. I am confident of the team to continue this diversification in our funding profile. The company has a strong liability pipeline to fund its growth plan. Rating partners have acknowledged this growth and thus given us a rating upgrade. We have secured a rating upgrade from CARE to BBB stable. In summary, I would like to highlight the following key points. Pursuant to the capital raise through warrants, leverage levels have remained modest and capitalization levels have been strengthened. Following the NCD issuance, we look forward to further diversify the borrowing profile in terms of both lenders and instruments. Star HFL is well poised to grow from here on keeping quality in mind, and the entire team is focused to create a strong balance sheet. I am confident that as a cohesive team, we will build upon the achievements to attain the business, financial and operational milestones we have set out for ourselves. Now, I would like to call upon our CEO, Mr. Kalpesh Dave, to provide the concluding remarks. Thank you. Over to you, Kalpesh.
Thank you, Natesh. So on behalf of the Star HFL team, I extend a warm welcome and New Year wishes to all our participants. I warmly welcome the appointment of Mr. Charles Hilango, a reputed financial services professional and ex-MD of Canfin Homes, as an independent director on Star HFL board. The governance framework will get further strengthened and Star HFL leadership team will get the right direction to steer sustainable growth under the auspices of well-respected and experienced board. I'm happy to share that Star HFL continues to walk the talk of being retail-focused, end-use-driven credit enabler for deserving EWS/LIG families. As we have grown, our leaders on ground have been personal witness to see housewarming ceremonies of our customers. This fills my heart with immense pride that we, as an organization, have not only started to grow, but have also started to play a meaningful role in realizing the home owning aspirations of these deserving borrowers. Star HFL sees itself as a part of the mortgage fraternity in retail low-ticket housing finance space. We, along with our peers, that includes banks, HFCs, financial institutions, credit societies, and others, have to work strength to strength to enable credit access and play our part in realizing our honorable PM dream of housing for all. On the business front, it is heartening to see the growth momentum being carried ahead well into the fag end of the financial year without compromising on the quality and the overall framework as well as guidelines that we have laid for day-to-day operations. As we are growing, we are expanding to those areas where we do feel that there is an addressable segment and we can develop a meaningful presence through our operations. Our endeavor is to expand to newer geographies subject to necessary approvals, keeping our retail philosophy intact. I have been saying this on every call, and I wish to repeat that quality will always take precedence and priority over growth, and our endeavor will always be to create quality loan book. So strong traction in liability, the pipeline so created due to that, and consistent capital raise, including the recent raise through warrants, gives us strong confidence to march ahead on asset side and grow the balance sheet. Star HFL is and will be a board-driven, professionally managed organization. Our employees are our value assets, and in line with promoting employee ownership, ESOP 2 scheme, as shared by Anup, has been approved. I wish to congratulate each and every member of Star HFL who have contributed their bit in the scale-up journey. Finally, I express our gratitude to all stakeholders, including the RBI, the National Housing Bank, our banking partners, rating agencies, business associates, valued customers, dedicated employees, and their families, all of whom have contributed significantly to the growth of the Star HFL franchise. We remain committed as a responsible lending organization to create value for all stakeholders as we march ahead in this journey of becoming an institution of repute. Thank you for your attention. Over to you, operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Majid Ahmed from Smart Invest. Please go ahead.
Hello, I'm audible? Hello?
Yes, sir, you are audible.
Yes, you are.
Yes, sir. Very good set of numbers. So my first question is, assume that RBI is going for rate cut. How much will it translate to your loan book, and how much of that will pass to the customers? Hello?
Natesh, you wish to answer this question on the probable rate cut and what is the impact on the P&L as well as on our overall lending?
Yes, you're right. Yeah.
So, it's like this. At this point of time, we are an affordable housing finance company. We are lending in the range of 15.5%. So we are not the typical urban housing finance. Point number one. If and when the RBI rate cut happens, of course we will benefit from our borrowing side, reduction in the cost of borrowing, which will definitely we will aim to transfer it to our customers in the form of a reduced rate. But at this point of time, a large part of our book on the asset side is on the fixed rate side. Floating rate as a proportion of our overall portfolio is not a big number. I hope I'm able to answer your question.
So what you're saying is fixed and floating, like is any bifurcation for both fixed and floating rate? Or?
Nearly 80% plus of our loans are fixed rate loans that we have extended to our retail customers.
Okay.
It so may happen that the people may do a balance transfer, but then to judge that what will be the amount of repricing, it's too early. Guess it will take some time. There it will have a lag effect, but then the benefit of it also is that we will also have a reduced cost of borrowing. So it is not going to have a huge impact in the sense of a negative drag. I guess it should be even-handed in that sense.
Okay. Thank you.
Majid, I'll just add to whatever my colleague Natesh has said. See, you have to understand, when there was an increasing rate cycle, at that point of time, I have mentioned in previous earnings call as well, that overall impact at that point of time due to increase in the borrowing cost was around 15 to 17% at the pre-tax level. Okay. But that particular impact basically was more or less, compensated given that, we are growing 100% year-on-year growth. So, coming to your question of, repo rate getting reduced, obviously there will be a, lag effect. That's what history says of, passing over that particular reduced rate to us as a borrower. So as and when we get it, obviously, that particular 15 to 17% increase that we had encountered, that kind of, will get compensated. And obviously, given that we are growing, that will add up to the overall bottom line, as we say. And as Natesh has said, as responded, that, majority of our loans are fixed in nature. Obviously, we won't be able to pass on that particular thing to those fixed rate customers. But for the floating rate customers, obviously, that benefit, we as a responsible lender look forward to pass on from here on. So obviously, we look forward to that particular impact, positive impact on our overall borrowing cost, and more or less kind of getting compensated by whatever, reduction was there in the, that increased repo rate cycle. Just to answer your question.
Yeah. Okay. Thank you. And the next question that I have is, what about the competitive intensity about the business? I think this is one of the place competitive intensity.
See, in my address also, I don't view, the private sector banks, public sector banks, housing finance companies, small, big, mid-size, cooperative credit banks, cooperative credit societies, all these are our peers. We are a part of the overall fraternity. And I don't need to mention how big is the overall market size. We all know that. And new age housing finance companies like us are also coming, to the fore to address to this particular segment. So all I'm trying to say is that, the segment itself is so huge that there is an ample opportunity to have peaceful coexistence amongst all the, operating players who are there in this particular space. Our endeavor is very clear. We do not intend to chase market share as such. That is not on our mind. We are very much focused on ensuring that, whatever business operations that we do is oriented towards credit, and the receivable management is something which we are, completely focused on. So I would go on to say that Star HFL is a credit and collection oriented company. And obviously, given that we are expanding our presence, the business is an ultimate result of that. So we are not worrying about, that kind of competition on them in terms of, who are we competing with. We just look within ourselves and ensure that, we address to this customer segment.
Okay, that's fine. I have two more questions. This question that I have is, what's your view on balance transfer, where good customers are getting pushed by large banks, where they're using low cost of borrowing also?
So yeah, absolutely. As my colleague Natesh said, that our rate of interest are in a certain range, and we are credit enabler to the new to credit customers who are having very limited formal credit history, I would say. Okay. So when they come, they get onboarded at that point of time, obviously, we do walk the talk with them. We help them to inculcate that kind of, regular banking habits, importance of CIBIL score. We communicate to them in our, every Saturday meetings that we have at our branches to these customers. And after a year or a couple of years, or maybe 3 to 4 years, this is what we have seen. Once the credit score gets developed, obviously, this customer does deserve a better interest rate for that matter, and he might opt for a balance transfer. And we are okay with that. I mean, we do not have that kind of intention of, holding back the customer. Obviously, if we are able to give any, counter offer, we do give them, but then it's okay with us. I mean, we have that money getting readily redeployed given the addressable customer segment is large. And the same holds true for other housing finance companies also, whose balance transfer requests we also entertain. So honestly, if you ask me, it really doesn't matter to us, as the, opportunity is used and the funds are ready to get deployed. So that is what I would answer to you.
Okay, that's fine. So you were talking about expanding in Ghaziabad and North India. What about South India, the Tamil Nadu market and other Kerala and other parts? Are there any plans of expansion in South Indian market?
Absolutely. So, what Anup said was, expanding to a newer geography, which is through a physical presence in Ghaziabad, that would cater to the areas in and around like Hapur, Meerut, Bulandshahr, so on and so forth. We have a presence in Tamil Nadu through a branch in Chennai. So what we are trying to do in this existing geography is to basically expand our base in and around, this particular center. So we intend, subject to approvals in place, to Vellore, Kanchipuram, Sholingur. These are the 3-4 areas which we intend to expand to in Q1/H1 of the next financial year. We intend to have a physical presence over there. Once this cluster gets developed, then we basically might be moving over to another cluster in Madurai and associated centers like Theni, Dindigul, Rajapalayam, so on and so forth. To answer to your question about Kerala, that also again is on the radar, but not in H1. We might, think of, first moving closer to Kerala, which is kind of a city like a Coimbatore, and then we see as to how we want to go ahead in terms of that. But yes, just to answer your question, Tamil Nadu expanding in down south obviously is there on cards.
Okay. Thank you. All the very best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. We have the next question from the line of Tanush Mehta from JM Financial. Please go ahead.
Good evening, sir. Thank you to the management for the updates. I want to ask, what is our current cost of borrowing, and what would you expect for the full year and going forward?
Matesh, you would want to answer this question?
Yeah, of course. So our cost of borrowing at this point of time is 12.17% per annum. Our average portfolio yield is in excess of 16%. We have a spread of around 5.5 percentage points. We expect our cost of borrowing to be steady at these levels. No major, we have not seen any major reason to believe. All our pending disbursements are around in these numbers only.
Okay. Yes. And next, I want to ask, in terms of branch concentration, top 10 branches contributing to any particular number of disbursements. If you can speak on that.
Yeah. So, Tanush, we are cognizant of the fact that there is always a concentration risk that is there if you are concentrated in one particular geography. And just to tell you, we are around 30 odd locations. So if you count the top 10 locations, for that matter, these top 10 locations would be contributing up to around 50% of the total business. And also these top 10 locations, around 5 to 6 locations would be coming from the state of Maharashtra. If you see our portfolio cut also, around 60% of the overall portfolio is in Maharashtra. We are cognizant of that, and hence we are basically diversifying in the existing geography. Predominantly focus is to expand in the geographies, existing geographies of Madhya Pradesh, Gujarat, Rajasthan and Tamil Nadu. And you will see a lot of action on that in the next financial year. And obviously new geography of NCR will kind of, rationalize the overall, top 10 percentage on the incremental side.
Understood. Okay. Lastly, I want to know whether the management is going to upload the investor presentation on the stock exchange for more clarity to the investors.
Sure. So, as a process after earnings call, we make it a point to upload the latest presentation. You will soon get an access to that, Tanush.
Okay. Thank you.
Thank you.
Thank you. To ask a question, ladies and gentlemen, you may please press star and 1. The next question is from the line of Brinkal Kumar, an investor. Please go ahead.
Hi there. So I'm actually joining the call a little late, so I'm not sure if this question has been already covered, but could you throw some light on your ALM profile, please?
Yeah. Thank you for your question. So on the ALM front, in none of our buckets we have any cumulative mismatch up to 7 years at this point of time. In fact, up to 8 years also. So from an ALM perspective, if you see the liability profile today, we are borrowings from NHB and banks have been for a period upwards of 7, and even there are some borrowings are in excess of even 9 years. So NHB borrowings at close to 10, bank borrowings are upwards of 9. And the financial institutions borrowing, that is NBFCs and other social impact funds, we have borrowed for not less than 5 years. So hence, from an ALM perspective, we are fairly comfortable. Besides the fact that not only on the ALM perspective, we also have a reasonably good cash position that will cover for at least next 2 months of disbursement, and also the fact that we have sanctions which will take care of the disbursements for the possibly even till March end or even April end.
All right. That sounds great. Thank you so much.
Thank you. We have the next question from the line of Ramjit Jaiswal, an individual investor. Please go ahead.
Yeah, hi, everyone. Happy to hear about the progress here.
So sorry to interrupt, but your line sounds muffled. May I request you to please use the handset while you're speaking?
Yeah, I'm using the same. Am I audible now? Hello?
Please go ahead, sir. It does sound a little muffled, though. Please go ahead.
Yeah. So my question is, when you speak portfolio at risk, what does it signify, and how do you see yourself benchmark against your peers? And the second question is, how and has been the cost to income ratio sharpening up from this company given you are expanding and investing? So my questions are clear.
One, you said about benchmarking ourselves against our peers on, what did you say, appraisal mechanism? What, if I'm clear?
The first one was the benchmark against your peers, and second is the sharpening of the company as they are expanding investing.
You're talking about cost to income ratio. One is benchmarking against peers and cost to income ratio, right?
Yes.
So, if if you're benchmarking us as Star SFL, as a company, obviously now we are moving closer to become a 400 crores AUM. Soon we'll become a 500 crores AUM company. So, if I want to benchmark ourselves, we are slowly getting transitioned, from a very small to a now reasonably, reasonably small. I would not still say mid-sized company. I would love to see Star SFL, reaching that 4-figure mark for that matter. So that is where we are. I mean, there are peers. However, in terms of the business operations that you're talking about, Star SFL, we are a part of fraternity. So as I said before also, that there are banks, there are HFCs, there are FIs, there are cooperative credit societies, all are our peers. I would not want to benchmark ourselves against, because each of them address to a particular customer segment. We would want to, be considered as a retail focused home finance company, providing that housing finance assistance through disbursement of low ticket loans in our operational geography. So that is what we want to be known for, and that is what we are doing as such. And like us, there are regional players in the market. There are multi-regional players in the market, and there are, within our overall group, there are HFCs also who have ambitions to become a pan-India player, and that's where we also come from. We also have an aspiration to have a meaningful presence in all those profitable, fertile markets where we wish to operate. And that is how I would see Star SFL as a part of the overall fraternity, rather than considering as to how, whether I am a 500 crores company or a 1,000 crores company. I would not want to consider that. So just to tell you, retail focused, affordable housing finance company, having an ambition to have a pan-India presence. So that is how I would benchmark us in this overall space. Coming to your next question of cost to income ratio, see, you have to understand that, there is a continuous investment in manpower, technology, and the branch infrastructure which we have been doing, given that, the balance sheet has to grow, and we do not intend to have put strain on one particular branch or one particular region for all our disbursements. So that diversification also we are keeping in mind, and we are continuously investing in these three aspects of the business operation. And hence you see, AUM grows by around 97 odd percent. The total income grows by around 70%. The net interest income grows by 50%, and the PAT grows by 40%. So you can, understand the operating expenses, basically are the ones which are there, which will be there, given that, we are in this segment where the essential touch and feel of the customer is important. And hence the cost to income ratio in this particular phase has been on the higher side. However, it is getting reduced every year, in fact every quarter. We started with around 75 to 80% cost to income ratio. Currently we are at around 58 to 59% cost to income, so as to speak. When the time, the overall branch infrastructure will get settled down, we will be exhibiting a linear growth rate of, let's say, 20 to 25 odd percent. At that point of time, I think the steady cost to income ratio should be in the range of around 20 to 25%. I'm not giving guidance, but that is what the overall, business plan shows, that, on a steady state basis, this is where we should be reaching, and that's what we are aspiring for. Just to answer your question.
Yeah. Thank you for answering.
Thank you. Participants, if you wish to ask questions, you may press star and 1. The next question is from the line of Disha Patel from Lucky Investments. Please go ahead.
Good evening, sir. Thank you for the opportunity. My question is, how does Star Housing Finance differentiate itself from competitors in terms of product offerings and customer service?
As I said, there is not much differentiator that we as a housing finance company would want to bring in. We are into a lending space. The primary principal business is, to lend, and that's how the home loan products that are there on the offer that we have for our customers. Where we obviously differentiate ourselves is when we go deeper into these rural geographies. And in these rural geographies, there are typical, low ticket loans. You cannot classify them as a, micro loan. Neither you can classify them as a low ticket loan. They are somewhere in the between of, ticket size of 5 lakhs to, 7 lakhs to 8 lakhs. These are, this is a very niche segment wherein you need to have those customized product offerings. And with that particular respect, we do have some kind of differentiated offering in these rural geographies under the brand name of Star, Gramin Grih Loan. So those typical loans wherein, the existing dilapidated structure in the native place needs to be raised down and you need to construct it. That's where we provide funding for. During Corona times, we got a lot of, requests from these smaller areas where there was a reverse migration. They went back to their native place. They wanted, an extra floor to be added onto their existing dwelling. That's a typical, niche product that we had launched at that point of time, continues to be operational as well. And the third product that basically, we offer was to basically give funding towards creation of a veranda or, for that matter, even bathroom for that matter, or even a study place for the kids for that matter. So those kind of smaller ticket loans we do provide under that particular brand name, as I said to you, and is operational in the rural segment.
Okay. Thank you, sir.
Thank you. The next question is from the line of Deepak Bajaj, an individual investor. Please go ahead.
Thank you for the opportunity. I just wanted to know that you are listed on BSE, right? When do you think you will be able to transition on NSE? And another one is, what credit appraisal methodology you use in assessing your customers? Please. Thank you.
Natesh and Anup, if you could just answer 1 and 2.
I think regarding first question, the migration from BSE to NSE, that will be answered by Natesh. Natesh will be appropriate person to answer this. And the second question, credit methodology, that will be answered by myself, that is Anup Saxena. Natesh, if you can just speak about the transition phase from BSE to NSE.
Yeah. So as far as the migration is concerned, there are three criteria. One is net worth. One is, I'm sorry. Okay. One second. I'm sorry. Kalpesh, can I take this?
I will take this question, not an issue. Natesh, just take and have some water, please. So, transition to the NSE, yeah. See, you have to, understand what are the criteria for this. So, NSE has, three major criteria. First is minimum net worth of 75 crore. That's the first criteria. Second criteria is the tenure criteria, which basically says that, this net worth of 75 crores has to be there for 3 preceding financial years. That's the second criteria. And third criteria, it has to be a consistently dividend paying company, if I'm not wrong. At the same time, it should have certain, quantum of investors, which basically makes it eligible to get qualified onto the NSE. So, the minimum net worth of 75 crores, we have met the quantum criteria.
Sorry.
Current net worth is at around 130 crores, so that is a tick mark. A consistently dividend paying enterprise, minimum number of shareholders, that also is a tick mark. In terms of the, tenor, last year was the first full financial year of 75 crores net worth. This is the second financial year. Come March, we will be completing 2 years. And the next financial year, which is FY24-25, will be the third year. So, after 31st March 2025, we should be meeting all these criteria, and in and around that time, subject to obviously shareholders' approval, board's approval, and other regulatory approvals in place, we should move towards NSE and put in our requests to get transition. So, just to answer your question, this is what it is.
Yeah, Natesh, I'm sorry for this thing. Just to add what Kalpesh said, the three criteria, as you said, one is net worth, one is profit-making track record, and we are meeting the net worth criteria. We should have we are meeting the 3-year profit-making track record. The net worth criteria is there. So I guess by March 25th, we'll be ready for making an application to the NSE.
Got it. What about the appraisal method?
Yes, so I will take that. I am Anup Saxena. So in terms of credit methodology, see, one need to understand that we are a rural-focused home finance company, and the underlying collateral for which the loan has been provided, that underlying collateral is the home, wherein the customer is going to reside with his family. So for the purpose of credit assessment, entire family income, whatever stream the customer is generating income, that entire income is getting assessed in terms of with the help of interview and with the help of scientific Excel sheet based assessment model, which has been validated by some of the microfinance institutions. With the help of that assessment model, and with the help of entire family income, after deducting household expenses of the entire family, whatever is left in the hands of the customer, on that left out amount, the appraisal is being done. Again, since this is net saving to the customer, this net saving is again get validated with the household assets of the customer, so that the repayment capacity of the customer can be revalidated, and within that frame of EMI, whatever EMI customer can afford, that EMI can be offered to the customer. So in short, that is the basically credit assessment model for basis on occupation of the customer, basis on income stream of the customer. We have developed about 14 to 15 in-house income assessment sheets, which is on the basis of occupation, geography, and basis on cash flow model of the customer. So I think that answers your question.
Yes, sir. Thank you for that.
Yeah, thank you.
Thank you. The next question is from the line of Tanush Mehta from JM Financial. Please go ahead.
Hello, sir. I want to ask a forward-looking statement. How do we see us in the next 5 years?
I will take that question, Tanush. Hope I'm audible.
Yeah.
Yeah. So, again, I will go back to, that benchmarking question that one of the participants asked, how do we identify ourselves? We were small. We are slowly transitioning to have a meaningful balance sheet. 500 crores AUM is the first, tangible milestone that we intend to achieve. We are not in a hurry for that, if you ask me. We will wait till that happens. It should happen not later than June. And again, mind you, I'm not giving you any forward-looking statement over here. But, tentatively, this is around this time, we should be able to cross that. That is the first milestone. Second milestone would be, again, having 1,000 crore balance sheet, and that's what we intend to envisage over the next 8 to 10 quarters. Once again, mindful of the fact that I'm not giving any forward-looking statement. Subject to capital being infused, being available, and subject to, liability being planned in a better manner, and we being able to deploy it in a profitable manner without compromising on the quality. Our PAR, which has been consistently coming down, comes down further. NPA level remains stable. And with that particular thing as a background, obviously, this is the, journey that we wish to traverse over the period of next 8 to 12 quarters. If you talk about the next, 5 years, so if you're talking about 27, 28, till 27, 28, I would want to, quantify this in terms of number of customers. We should be able to serve cumulatively around 50,000 to 60,000 odd customers in EWS LIG segment. And I'm talking about the logins. I'm not talking about the overall disbursement. We should touch base with, these customers. And when we are touching base with these customers should come from a diversified, geography. So obviously the intent will be to become a pan-India player in this particular space. And if we are able to achieve that in the next, 50 to 60 months of operations, we would think that, we are successful enough. And obviously, the balance sheet and P&L will be built up if we are able to achieve broadly these two aspects, just to answer your question.
Thank you, sir. I hope strategy will achieve all the milestones.
Thank you so much, Tanush, for your wishes. Thank you.
Thank you.
Thank you. As there are no further questions, on behalf of Star Housing Finance Limited, I thank everybody for attending the Q3 FY2023-24 earnings call. In case of any further queries, please do get in touch with Star HFL Investor Relations Desk. Thank you and take care.